afternoon, everybody. This is David Littlejohn, and it is May 12th. It's a little bit after 3 p.m. on Friday, and the markets are closed. Woohoo! So I'm going to do a little bit, something a little bit different this week. Rather than just give you the market update, because the news hasn't changed all that much. Okay, markets are still close to all-time highs, and politics are still a mess, and economic data is still okay. So there's the summary. The bigger picture that I want to talk about is what's going on in the market right now. We have something a little bit unusual. So I want to draw a concept for you just so you get it. Imagine two different forms of analysis. On one side, you have what we call fundamental analysis. And fundamental is, barely fits there. Fundamental analysis is really the nuts and bolts of how things work. It's things like company profits, the price to sales ratios. It's all of those sort of the data points that you can study about a company that I guess is traditional research driven, if you will. So the fundamentals are when you look at price to earnings ratios, all that stuff. Then you have a whole separate school that's called technical analysis. Technical analysis is simply the study of price and volume. Volume meaning how much are people buying, at what time, and at what price level. And then what I do is you try to marry them up. And so if you have a separate sphere over here called technical analysis, okay? Well, the overlap in here, when everything is sort of quote-unquote normal, then that overlap they should sort of explain each other. They both make sense. Okay, well, given the fundamental conditions, the technicals are behaving in line with what we would expect. And then when we see one of those two get out of sync, then this area becomes a problem. That's when things start to get a little bit weird. And so that's what we look for to say, well, is something changing or not? So here's the issue, and we're going to talk a little bit about the technical picture at large here. So I put up on the board the three major indexes. So again, we closed at the week. The Dow Jones Industrial Average is at 20,896 and some change. The S&P 500 is at 2,390 and some change, and then the NASDAQ is at 6121 and some change, all right? So we've got what I call these big fat round numbers. So the Dow is really close to 21,000. The S&P is really close to 2,400, and the NASDAQ is really close to 6,100. The NASDAQ is the one that's the healthiest of all the indexes right now. It's a heavily tech-weighted index, and so it's been moving the best. The Dow and the S&P have really struggled because they've both gotten to this number. So if I drew a line right here and said we have for the Dow 21,000, and then for the S&P 2,400. What's happened is the price continues to get very close to here, and in the middle of the day it may even get a little above it, but it always comes back down and closes below that point. And so then the next day it will trade around and it will come up very close, and it keeps coming back down. Very close and coming back down. What we call that is resistance. Okay, so we've met a resistance point in the market, and the people that are buying and selling are trying to make a decision. Is it a good bargain right now? Well, the concern is, bigger picture, what does this mean? Now, we'll see where this ultimately plays out, but here's the trend that we want to watch. We want to see fundamental data and economic data that looks healthy. We want to see general geopolitics functioning, so we don't like to see a lot of wars, we don't like to see a lot of natural disasters, things like that, and we don't like to see a lot of politicians that are creating unknowns in the future, right? So when they start, gridlock is okay, believe it or not, because that's predictable, nothing changes. But when you start to get change, we have to figure out how to price that into the market. So here's what we watch for. So the markets naturally go up, right? They go up, and then they can come back down, and then they go up, and they go down, and so forth. Well, this is fine as long as we see a series where each time the market goes, we see a higher top each time. It's like the mountains are getting taller, right? So higher highs and higher lows gives us an upward trending market, big picture. Okay, what happens though when we get a break here, we see a point where the market trades down like this? Lower lows and lower highs. It's a change in directional trend. It's starting to look like spaghetti on here, I understand. The issue right now is if we're at a resistance point and we're going into the summer, traditionally summertime can be a sideways market. We don't get as much data. A lot of people take vacations, including the entire workforce in the country when students are out of school. So that can be sort of an economic sideways move. No different than how in December, moving up toward December as we get into the holiday season, there's a lot of activity and a lot of spending, right? Everybody's in school, everybody's at work, there's not a lot of vacations, so it looks different. Well, this seasonality is something to consider. Is we're reaching this resistance point, the markets keep failing against it, are we gonna move any higher for a little while? I don't know, okay? But what I will tell you is we've got a lot of things the market's having trouble pricing in right now. So we're gonna keep an eye on this, but that's the critical point, is we're actually at the inflection point now. The good news is if we manage to finish above this line, we probably get to go even higher, okay? But if we can't break above that in the next week or two, we're gonna start watching for a little bit of a downdraft. Maybe not, I'm not talking about a catastrophe, I'm just saying the market may take a breather, all right? So that's what I wanted to cover this week, is just that brief technical look at the markets. Again, technicals, fundamentals, where they overlap is what we're concerned about. And do I have a reason to be concerned? No. I think we're okay so far, but this is what we're going to keep an eye on. This is what I am watching, and this is certainly something that if you have additional questions about, I'd encourage you to contact us. You could reach us at info@littlejohnfs.com. You can also visit our webpage, littlejohnfs.com. Call the office. It's area code 541-375-0898. And other than that, I would just encourage you, if you like the videos, please click subscribe down below. Give us a thumbs up, share with a friend, and help us get the word out. Thanks, everybody. Have a great weekend.